Hello, welcome to another trade recap. So this trade was taken on Friday, April 10th. We had CPI at 8:30. Now moving on to the charts for our higher time frame bias. So going into the day, my bias was on both sides. I was neither bearish nor bullish because I had draws on liquidity on both sides. On towards the upside, the bullish draws on liquidity were these weekly highs. They were equal highs too on US 100. At that time, these had not been swept, so I had a draw on liquidity towards the upside. Plus, I also had draws on liquidity to the downside. If I go on to 15-minute, we had this low resistance liquidity just above these unmitigated gaps and this whole range which market needs to balance. Plus, if we go up here, we had equal lows even here. We had an unmitigated 15-minute here. So the market needs to balance this whole range that it created to go higher. So I had draws on liquidity both sides, bullish and bearish, but there was a certain condition that I needed to see to decide whether the draw on liquidity for that day was bullish or bearish, and that condition was this 15-minute bullish gap. This was created just before market open. So I was looking if the market was to go down, this bearish gap needs to be respected towards the downside, and if it gets respected, my drawn liquidity is towards the upside. And just before market open, the market created this data high, so the drawn liquidity towards the upside was stronger than my drawn liquidity towards the downside. Now as market opened, it respected this 15-minute gap, and I will show how I lost my trade by entering early due to FOMO, the fear of missing out. Now, as soon as market opened right here at 9:30, the market went up and created equal highs with this data high. And as it came down, it never actually tapped into this 15-minute gap, and we had generated equal lows just above this 15-minute gap. So the market came down, but it didn't tap into this 15-minute, and it instantly inverse this 1-minute gap, and this is where I entered the trade. Now let me tell you why this is not a good trade. First reason is market had equal lows just above this 15-minute gap. The second reason was this long was in a premium zone. It is, just look at the risk to reward. It's not even 0.7, it's 0.64. So the risk and to reward ratio was bad. We had equal lows, we had an unmitigated 15-minute gap, and if we go to use 500 at the same time, let me tell you, we were here somewhere just below this 1-minute gap. So this 1-minute gap was not inversed. So taking a long on US 100 was just asking for it. So I got instantly stopped out, and then I waited, and this was the actual setup that was presented, and I did not take it. I was clouded by the fact that this was Friday and the price action is not going to be smooth, but this was the long that I should have taken. The market came down, it swept this liquidity, it tapped into the 15-minute, it created a SMT here too with ES, and then it showed displacement towards the upside. It inversed this 1-minute gap, it closed above this 5-minute bearish gap, and look at that. I would have entered here and the data high would have been my take profit, and this would have been such an A+ trade. So this was it. I showed you the trade that I took, which was due to FOMO, and this was a very bad trade. I should have not taken it. I should have waited and actually took this trade. So this was it. I ended the day with -1 RR, and although I'm happy, I did not revenge trade. I just looked at the price action, and this was it. Stay tuned for further updates.